Well, banks haven't skipped a beat in passing on the rate rise, all of the big four confirming they'll hike rates in full for variable borrowers. But they haven't been as quick to act on the savings front. Westpac, ANZ and NAB have passed on up to 0.25% to some of their savings accounts, while CommBank is yet to do the same. For some expert analysis, we're joined by Moneyman Scott Phillips, Chief Investment Officer from Motley. Scott, good evening to you. As mentioned, all the big banks have responded and a number of smaller banks too. Do you expect all institutions to follow?
Tomo, good evening. Yeah, that is the bad news, unfortunately, for borrowers. The simple reality is when the RBA puts rates up, it puts up every single bank's costs. They really do have little option other than to pass it on, unfortunately. I'd like to say otherwise. We don't mind a bit of bank bashing sometimes. This time around, this is real cost increases for the banks. They're all going to have to pass it on almost in full. Some might try a little bit of mucking around and try and do a bit of marketing, but the reality is costs go up and so do prices.
A question everyone wants the answer to. How many more rate hikes can we expect before the end of the year, and how soon?
I wish I knew the answer to that one. I mean, there are some people forecasting almost every month between now and December. I think that's a bit aggressive. I reckon par is about 3 more this year, maybe 4. That's the sort of number the RBA is looking for with their language. They're, of course, going to make sure the impact they're having on the economy isn't too severe, but also on the flip side is enough to get that inflation rate in check. If I was a betting man, I'd say 3 to 4 is about what to expect. That means 0.75 to 1% more, unfortunately, on the average mortgage rate.
OK. More than ever, lenders will be looking at monthly spending habits.
They will, and this is really an extension of what they've already been doing. But the real concern now, of course, is with rising rates, there is going to be more stress on the average household budget. And so banks are going to be triply sure that the loans they're making are actually going to be able to be repaid by borrowers in circumstances where rates continue to rise, as we've just talked about. Always important to make sure you've got your personal finances under control. The bank's going to be looking over your shoulder to make sure you're doing the right thing too.
Scott, turning to other finance news, there's a very important update out of the US shortly, their own interest rate decision. What will you be keeping an eye out for?
Yeah, very much interest rate week this week, Tomo. And of course, what happens there has massive reverberations right around the world, including Australia. The US Fed have talked about going big and going quickly, possibly as much as 1 full percentage point in 3 meetings. That suggests at least one of those meetings will be a 50 basis point rise, or 0.5%, and 2 other 0.25% rises. The language they use around the what and the why, and I guess to some degree the when, will really tell us how bad the problem is there. Of course, they had their inflation issues about 3 months before ours. So it's also tempting to look at those numbers, and I think with some degree of validity, and see what we might expect down the pike here, maybe at the middle of the year.
OK. Finally, what are US futures pointing to?
I get to finish with some good news, Tom, after talking about higher interest rates the whole time. The good news is US futures up about 1/3%. Hopefully that holds for their market there. And, of course, us off to a good start here tomorrow.
Scott Phillips, thank you.
Thanks, Tomo.